Good afternoon, traders. This is Christian from Market Trade Group, and it is Wednesday, November 16th. So we are now halfway through the week. Today was a bit of a risk-off day in equities, although it didn't really seem like that much of a risk-off day in terms of the macro environment when you throw in what bonds did today and what the U.S. dollar did today. Bonds, we'll kind of start with those, and then we'll talk about some of the major moves. Definitely the retail group. I want to talk about that for a minute. I want to talk about a couple other moves that we saw today in the crypto space and so forth. Before we do that, risk disclaimer in front of you. Everything that we're going over is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer right here. All right, so let's get to let me talk about the macro. I'll go through the macro stuff for about 1 to 2 minutes here, but I mean, this is what you want to see. I think if you're an equity investor, is bonds really rallying like this? I mean, they were up 1.6% today. This is the 30-year bond futures, and I thought we would stop at 125.22. I mean, this is now above the 50-day moving average. And remember, last week we overcame the 20-day moving average. We did a little bit of backing and filling here into the 5-day moving average. Notice how neat that was, really neat and clean, right? Waiting for that 5-day moving average to kind of catch up. Price finds it, and look at it kind of glide up here a little bit. So I would what was resistance is now going to be a little bit of support, both this 125.22 as well as the 50-day moving average. So I thought that was a really big thing to get over the 20-day moving average when that happened, because literally we've been moving down and since August, just straight down in bonds, and now we're above the 50-day moving average. So that's really interesting to me. And there was a bond auction today that had some strength to it too. I think it was a 20-year bond auction. So there was this virgin point of control that got taken out, and we managed to stay above it pretty decently. Now, Thinkorswim's going to take a minute for this to come up, but so I'll pause here for just a second. Again, Thinkorswim is crunching all the data, and the further I'm going out 180 days here. So the further that you go out, or the longer the time frame, it takes a while to kind of reference the data. So I'll give it another maybe another 5 seconds here for you to be able to see that. But you're going to see one that's going to pop up on your screen in just a second. There it is. Right there. So there's your VPOC takeout. This happens sometimes, is that price will go right up to an area where there was high volume previously. I mean, this is all the way back here. I mean, it's just a long ways away, all the way back to this. And I can't, Thinkorswim's not going to let me zoom out. And I can't even see what the date is on that, for whatever reason. And there it goes. Thinkorswim doesn't like when you go and try to crunch all this data. But in any event, that's bonds. And when you look at the dollar, you may be thinking like, oh, the dollar must have been stronger today. What was it that caused this move in equities today? Well, it just wasn't one of these macro factors. Remember, these, again, sometimes I see traders get confused, or like, I don't understand what's going on. Bonds are rallying today. Why are equities down? Because it's just one piece of the puzzle. It doesn't mean that relationship is going to carry every single day. There's a lot of other factors out there. For example, what do we have on Friday? Right? We have option expiration. So it could be that there is some maneuvering going on for Friday's option expiration. There's usually one day during an option expiration, a monthly option expiration, one day during that week where things seem out of whack. They seemed a little bit out of whack to me today. So we'll see. I mean, remember, one day is not a trend. So I'm just going to say for now, that could be what it is, but it doesn't have to be. At the end of the day, the price action is the most important, not the actual reasoning or the causes, right? So, newer traders, they're always looking for the reason or the story, because that's what they cover on, CNBC or Bloomberg, but it's really the price action that matters, right? You're never going to figure out every single thing that, every news headline that hits and so on and so forth. So the price action tells you everything that you really need to know. Now, notice what we're doing here for S&P. we're just kind of hanging out here. We're consolidating. I was on Benzinga for a short time, and we were both talking about, myself and Joel from Benzinga, we were both talking about the 4,000 level. This has been very sticky this week, right? We're just kind of notice that we haven't done anything this week. So it's very difficult. Like, so just talking about the S&P here and the S&P price action, it's very difficult if you're getting really negative about this market, or if you're getting really positive about this market, you're probably doing it wrong, because this week we've gone nowhere. This is basically where we started the week, right? Now we've explored higher levels. That was on the PPI number. We've had a little bit of volatility to the downside. We are in the lower range of this. We are actually back to where this VPOC takeout was, and that was where a lot of volume has previously occurred, where we haven't revisited. So again, this is logical. Remember what I said with the bonds, right? Letting the 5-day moving average kind of catch up. Notice that it's kind of caught up here. So, perhaps we're going to see a move a bit higher out of this consolidation. Again, I'm not sure which way we're going to go here, but I know that we're holding for now the 5-period moving average, and the trend right now, the short-term trend is your friend. That's the way I'll say it for now. One other thing too about this is that you notice on the days, we've had several days and over the last, going back to last Wednesday, where this market looks like absolute crap. And sorry, that's a big technical term, by the way, but it doesn't look good on one particular day, and the next day we rally pretty hard. This happened the Wednesday prior to the CPI number, right? We had the crypto stuff going on that day. We closed on the absolute lows. We closed back below the 50-day moving average, and I was even thinking, I'm like, wow, that's not good. If we don't get a good CPI report, we could start to come back to the bottom of value. And you could see what happened thereafter. And then to a lesser extent, we saw kind of an ugly day on Monday. Monday wasn't a great looking day either. So the point that I'm trying to make here is, don't get too discouraged on these down days, because a lot of times the market comes right back. At least that's been the pattern over the last week or so. So bear that in mind. One day, again, is not a trend. I say that when there's a very strong day too, right? That one day is not a trend, right? And be patient, wait for signals. So for me, like, a signal would be breaking the 5-period moving average. Then I would be like, okay, right, then I need to either reduce risk, significantly, or do something else. Now, that's the S&P. It gets a little bit different when you look at the NASDAQ, right? And about the differences in some of these stocks. This, to me, is a bit weaker. We did come up and take out this virgin point of control. We talked about that in yesterday's video, and we got a fade off of that. And today, we're down about 1%. Again, we're still holding the 5-period moving average. What I sent out earlier is this chart. I said, hey, if this 5-period moving average can't be can't hold up, then we could see possibly a push back down to the I think that's the 50-day moving average, which lines up with 1522. It's not the worst thing in the world. I just also think that to kind of give you a little bit of my own personal opinion on this, but I think that we've seen a lot of short covering in the tech and the growth names, and that could be explosive moves. And I think we've seen that in certain places, but now that the shorts have covered, all right, now you're going to need to see the heavy lifting, right? And that comes after a VPOC takeout, right? So easy, come up, well, not easy, but come up, take out a VPOC. Now it's the hard part, right? And I talked about that, I got into pins yesterday, which did not have a good day. It didn't do anything that bad. It's still holding above the value area, which is 2450, so not looking that bad. But just like when price came out and took out this VPOC, right? Now it's the heavy lifting. Right, you come up to an area of high volume that you haven't revisited. Notice how difficult it's been for the price action to get back above 25.85. It's still having difficulty with it, right? And this was taken out back on September 14th, right? Back and forth, gets up to this and just can't do it. So In this name, I think, as well as many other names, there's a lot of overhead supply in this market. IWM, depending on the day, you may have been really bullish IWM or really bearish. IWM just did the same thing it did 2 days ago, closed back below the 200-day moving average. There's some pretty big weakness in the small caps today. They definitely underperformed, and we don't know. I think, again, give it a little bit of time here, right? People who love to look at a chart and say, oh my God, it's rejected at the 200-day moving average. Well, it was rejected the other day too, and it got back above, it's back below, but one more day and it could get back above, or it could kind of continue down to the 20-day moving average down here. All right, so I think that it makes sense to kind of wait a little bit, right? Unless you're seeing something else that I'm not. But for now, it's consolidating, right? I think a move really back below the 20-day moving average will tell you that that this is a false move. And overall, I don't think that's a great sign for the market if we see that, right? The Dow stocks, I think they outperformed today. They were essentially flat. Remember, they're kind of consolidating in here too, above the 200-day moving average. So, that's not all that bad. Again, I still think that this group, the group of steady dividends, more of a predictable, steady earnings as well, more reliable earnings. I do think that those names are going to do better in this environment with higher interest rates. Why do I keep mentioning that in every one of these videos? Because it's important, right? Interest rates, if you look, bring up US here, right? We're at the 2-year is at 4.3%. We have an inverted yield curve, which is generally a signal of recessions, right? The 2-year yield is much higher than the 10-year yield at 3.7. Again, I'm not going to talk too much about the yield curve, but that's not a great sign for the overall economy. Of course, the market is different than the economy, but overall, this is not a great thing. Now, again, like this changes things quite a bit. Let me close this. Bring up just a yield chart, right? And if you look at a 5-year chart, right, this changes things quite a bit. When you go from 0 to 4.3%, right, different stocks are going to do better when you have interest rates this high like this. Okay, so just to put things in perspective, let me talk about a couple of the other themes for the day that stood out to me. This week is all about, or so far has been all about, like retail earnings. We had Walmart, we had Home Depot yesterday. Very interesting today. Target, was hit today. This is the XRT. XRT, remember, is an equally weighted retail ETF, meaning every name gets right around the same weight. So there's no major skew that goes on in this ETF. But let's look at the right side of the column first. AAP, bad earnings, fell 15%, right? That's a big hit. Target was down 13% too. Now, look at what it did. Like, it dragged down a lot of things like Wayfair, down 11%, which I don't view as a quality name. Macy's, Nordstrom down 8%, but kind of interesting because don't forget, those weren't the only companies that reported today. TJX had a fine quarter. They were up 5%, right? And then Lowe's, which for some reason maybe Lowe's isn't in this ETF, but Lowe's was also up today. So those did not balance it out in terms of, like, for example, yesterday we had good results from Walmart. Home Depot were not the best results, but Home Depot ended up closing higher on those numbers yesterday. But the bad really outweighed the good reports. So just very interesting how that worked out. And XRT was one of your worst performing groups. Biotech also down. Biotech was down 2.8%. Biotech just can't seem to really turn the corner here. We did get above the 200-day moving average, but this is coming in pretty fast and decently here. So we'll have to see if biotech holds in here, because I like when more riskier things like a biotech kind of lead the move and are participating in the move. I don't like when small caps and when biotechs, for example, start to break down while the rest of the market is hanging in there. That's not a great sign. So we'll keep an eye on that the next couple of days. How I basically traded today, I think that this Bitcoin is very problematic right now. I might be looking to short Bitcoin tomorrow. depending on if we break here, right? It is holding in here. Again, you could obviously, everybody has different trading styles and so forth. I like to wait for a little bit of confirmation. I am a trend trader, and I like to look for a little bit bigger moves than, just trying to time the turn and then taking profits right after the turn. I like to make sure that there's a decisive move lower. So I'm looking at this 15,959. I'm using the 1 hour value area for that. And if we break that, I will look to be putting on sometimes some type of short. But this looks pretty textbook so far. It looks like this is a bear flag. And I did put on right before the open, I saw that this headline with, I don't know, Genesis. I guess it's not the band Genesis. I don't even, so I'm out of my depths a little bit with all the stuff that's going on in the crypto world. I say it over and over, I'm not a crypto expert, but I know enough to get by. And I know that this coin also looks pretty weak here. This thing fell right. I shorted this right as on the break into the value area. You can see the 80% rule is in effect, and I'm trying to get my last target somewhere in this 45 region. You can see how I traded this. So I put this on right around 8 o'clock this morning. I think the last target I hit was 48.50, and I've got one more target to go. And if it rallies a little bit, I might re-add a little bit to that trade, thinking that this comes down to about 45 and change. We'll see how that goes. A couple other things that caught my eye for the day. Some of the names that I think are pretty quality. This super microcomputer, which got ahead of its, was pretty stretched. This thing is one of my favorite companies right now. Down 5.4%. Definitely got extended here. What I'm going to be watching, it's right into the top of value support for the week. We're watching this 81.24 level. Another one, AEHR, which is a really big momentum name. This thing was down 12%. Again, this thing really moves. I would watch to see if we can get back above 23.10. I added a small position, which I'll be scaling into. I would like to see this name actually come down to 21.50, right? But again, the way that this thing moves, I just figured, hey, I'll put on a little bit of a piece of a trade with the name down 12%, and then I'll add more if we get down to around 21.50. All right. And then, of course, I want to see if that holds. If not, then we could be down to 19.50. So that's a name that I'm definitely watching for tomorrow. What else? Was there any other names that I really wanted to go over today? We talked about bonds, the utilities, and right from the start today, you can kind of gather what names were doing well. Some of the healthcare, like a Bristol Myers. I actually tried to trade a little bit of AbbVie today. It didn't have enough oomph today and was just started to give back. AbbVie has been kind of a fake out name. A couple of times it looks like it's going to go, and then it kind of gives it back. So it did this again today, and I don't. This isn't like a high conviction name for me. So I took this thing off a little bit below my cost basis. Where this thing closed, I think I did the right thing. I got out of it a little bit above cost basis. So kind of a flat trade for me, because I did take a target higher. And that's that's how it goes with some of these names. SHLS, right? New name for me. This was brought up in the trading room by one of the colleagues at Tribeca Trade Group. He brought this to my attention. This is a solar name. They make some of the components that go into solar names. So nice gap up and kind of nice follow through day, up 3.9%. I started a position. If you zoom out a little bit, you'll see that this is not at all-time highs. This was at a higher level. So I'm actually targeting this VPOC up there at 32.20. Also ENPH. I would pay attention to this name. I looked at this a couple times, but it looks like it could be an inverted head and shoulders here, building here. Some type of abstract inverted head and shoulders, probably left shoulder, head, right shoulder, but it does have to cross the neckline. Remember, I talk about this all the time. Oh, this looks like this pattern. or this, looks like this pattern. It's not a pattern until it's actually a pattern, right? So it's got to break that neckline, and then we could have an inverted head and shoulders in an uptrend. So yeah, watch this level between right around 315. I think that might entice me if it kind of gets at least over this little consolidation to give this a try. But I'm interested in this name here. No position on currently. All right, guys, that is it for today. Have a great night. Yes, I had some questions about this. I'm going to be running just for new members, a special. It's the end of the year. I'll retweet the link. Someone tried to sign up and they're like, "Oh, I can't put the coupon code in." There is a separate link for it. So you do get 2 months, and you get them 25% off. Okay, that's the deal. 25% off for 2 months. So kind of a little bit of an introductory discount, so you could see what Tribeca Trade Group is all about. Get an understanding of what the routine is like day to day, and you get a discount for that. All right, so I'll retweet that out a little bit later. Sorry if you accessed the wrong link for that. All right, guys, have a great night. See you tomorrow.